Hey everyone, welcome back to Corporate Decoder. I am your host Alex, and today we are diving into some SEC filings for Dynex Capital Inc. Prepare yourselves because this one is a bit like finding a rare gem in a pile of investor relations paperwork. So what exactly is this document all about? Well, at its core, this is a report filed on the 28th of October 2025. Think of it as a company giving an update to the public and the Securities and Exchange Commission, which we call the SEC. Now, Dynex Capital Inc. is a real estate investment trust or REIT. They focus on managing a portfolio of investments in real estate related assets, but let's not get bogged down in the jargon. What is important are the updates they're giving us. The main reason Dynex Capital is filing this is to provide some important updates regarding their business. They're essentially updating information that was previously shared in other filings. There are a couple of key areas they are clarifying. First, it is about how their company is taxed. This is super important because how a company is taxed can significantly impact its profits and how much money it can reinvest back into the business. They filed something called an automatic shelf registration statement, and this filing updates how we should look at the taxation of their company. They previously filed this statement on the 28th of July 2025, and this new report revises and replaces certain tax information that was in a prospectus dated the 28th of July 2025 and a later prospectus supplement from the 29th of July 2025. Beyond taxes, they're also providing updates on legal matters. This is also a critical piece because legal issues can range from minor administrative updates to potentially significant risks that could affect the company's operations or reputation. This report also lists out its exhibits. These are essentially supporting documents. We see opinions from a law firm called Morrison Foerster LLP, which likely relate to the legality of certain securities or actions the company is taking. These legal opinions are important as they provide assurance to investors that the company is operating within legal frameworks and that its corporate actions are sound. The core of this report is its focus on refining and superseding previous disclosures about the company's tax structure and legal standing. This is not a new announcement of a major business move like an acquisition or a new product launch. Instead, it is about providing clarity and accuracy on existing information. It is signed by Michael Angelo, Chief Legal Officer and Corporate Secretary. This confirms the authenticity of the report. Now let's try to put this into context. Dynex Capital is in the business of real estate investment trusts. REITs are companies that own, operate, or finance income-generating real estate. They are known for their dividend payouts to shareholders because by law they must distribute a significant portion of their taxable income. They have common stock trading on the New York Stock Exchange under the ticker symbol DX. They also have preferred stock, specifically the 6.900% Series C fixed to floating rate cumulative redeemable preferred stock trading as DXPRC, this Form 8. K filing is typically used to announce material events that shareholders should know about. In this case, the material event is the clarification and updating of taxation and legal information. It is like a company saying, hey, remember that thing we told you before? Well, this is the even more precise version. So what does this mean for us as observers or investors? Firstly, it signals that Dynex Capital is being diligent about its regulatory compliance and transparent with its disclosures. Updating tax and legal sections is not usually done without a reason, whether it is a change in tax law, an update to an ongoing legal matter, or simply a refinement to ensure absolute clarity for investors. It is important for REITs to have their tax structure sorted out because it directly affects their profitability and their ability to pay dividends. Any ambiguity or potential issues in taxation can be a red flag. By providing these updated clarifications, Dynex Capital is aiming to reduce uncertainty for its investors. The legal matters section is also crucial. While the specifics of these legal updates are behind exhibits 99.2 and 99.3, which we do not have in full, here we can infer that any updates to legal matters would address ongoing litigations, contractual changes, or regulatory compliance issues. While this report does not contain headline-grabbing financial figures, it is foundational. Clear tax and legal frameworks are the bedrock upon which a company's financial health is built. Without these, in order, even strong financial performance can be undermined. In essence, this filing from Dynex Capital is an exercise in clarity and compliance. They are fine-tuning the details of their tax and legal landscape. This kind of meticulousness, while perhaps not the most exciting, is a sign of a well-managed company that is paying attention to the intricate details of its operations. Now, looking at Dynex Capital overall, they operate in a complex market. Interest rate changes can significantly impact REITs as they often rely on debt financing. Their strategy typically involves managing a portfolio of assets that generate stable income, which they then pass on to shareholders. The fact that they are updating their tax and legal disclosures suggests they might be preparing for future financial transactions, or simply ensuring their existing structure is robust. This kind of behind-the-scenes work is what allows companies to operate smoothly and avoid potential pitfalls. If we were to speculate on the impact of these updates without the full exhibits, we'd say it is likely aimed at enhancing investor confidence. By being upfront about tax and legal considerations, they are offering a clearer picture of the company's operating environment. This can be particularly important for preferred stockholders who have a different risk profile than common stockholders. So, to wrap up, this particular filing from Dynex Capital Inc. is not about announcing new ventures, but about reinforcing the clarity of their existing financial and legal posture. It is a testament to the importance of transparency in the corporate world, and a reminder that even the seemingly minor details can have a significant impact on a company's stability and its ability to grow. What is your take on the importance of these detailed updates from companies? Do you think these kinds of filings are essential for investor confidence, or do you prefer straightforward financial results? Let us know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more in-depth corporate analyses. And don't forget to join our growing community on Discord linked in the video description. Thanks for watching. See you next time on Corporate Decoder.